Well, howdy. We'll start with our panel in just a few seconds. The governor's office has given us a moment to tell you about something that's pretty historical. If you don't know, NABO stands for the National Association of Women Business Owners. We were founded in 1975 and really represent a unified voice of the almost 11.6 million women business owners in the nation. We are an organization that represents the interest of all women businesses, and this is one of the reasons I'm so passionate about this organization, our members and non-members. It is really about positioning women business owners in the economy the best way that we can. And really that mission is about four things. It is about strengthening our economic development and the position that our business owners have. It is about creating an innovative and effective change in business culture. It is about building strategic alliances, coalitions, and affiliations, which is one reason why we're able to bring events like this to DFW. And as well, transforming public policy and influencing opinion. And I think that's a mission pretty worthy of getting behind. Susan Hager, which is one of our NABO founding presidents, has said, get a seat at the table or build your own table, but be sure to bring women with you. And as a part of your local DFW chapter, there's a lot of things that you can gain access to. One is access to capital, which is why we're here today representing the funding panel. But we also hosted a funding conversations. We're really passionate about opening up the pathways to funding for women business owners. But there's also about access to confidence through leadership training and mentorship programs, community. I have to say the NABO women are women who have your back when it comes to being in business. And something that's near and dear to me, you can never be too ambitious. There is not a woman business owner in NABO that is going to condemn you for that or question you for that. They're going to support you for that, and they're going to ask, what can I do to help you? So the community is huge in our area. And then lastly, it's access to the capital. We are a very active advocacy group, but we're also promoting our members to be active in their own ways to make sure that our policyholders are hearing from women business owners and what our concerns are. Our legislative legacy is celebrating the 30th anniversary of a very hallmark piece of legislation, H.R. 5050. If you have a line of credit, if you've ever applied for a business loan, if you have a business company credit card in your name, you can thank this piece of legislation. In 1988, most states required a woman business owner to have a male co-signee on any business credit. So, your husband, your brother, your father could co-sign. And if you did not have one of those relatives, you could have your minor son co-sign on a loan for your business. That blows my mind. It blows my mind that that has been in my lifetime. So really, this bill passed in 1988 has changed a lot of that. It also is the piece of legislation that established the Women's Business Center program. And I know we had an announcement earlier. Tarsha is going to be heading up our local. We are actually getting a Dallas-based Women's Business Center, so we're really excited about that, as well as founding the National Women's Business Council, and has required the Census Bureau to actually count us and report us as viable businesses in our market. So today, NABO continues to play an important and active role in advocacy, whether it's co-writing, whether it's contributing, testifying, or just supporting legislation that actually changes the environment for women business owners. And we continue to provide education and access to stellar mentorship programs. I know we've got a table in the back, and Liz is back there, as well as Marcia and many of other members who'd be happy to talk to you a little more about that. One of the really driving factors is while we do have a local chapter, we're actually a national organization and extend internationally. And in April, both myself and a few other members were at the World Association of Women Entrepreneurs event in New York, where they had over 12 different countries of women entrepreneurs that were there, and hands down what they said is, we're watching you. We're inspired by you. We're learning from you. And I think that's amazing because we've come so far. But in truth, DFW, I believe, is one of the largest women-owned business communities. We heard a little bit about that earlier today, but it's time that we actually all come to the table. We're very quiet in this area, and we need to be able to have our voice be heard and be the force that we are in our own business so that we're shaping next generation of women businesses and really helping each other grow as we go. So we still have a long way to go. And according to Linda McMahon, current administrator of the U.S. Small Business Administration, the persistent disparity for women business owners still lies in access to capital. And when we look at women-owned businesses and male-owned businesses, there's a couple things that stick out. Number one, women are more likely to personally fund their business. And I hear that conversation all over the place where people are going into 401ks, using personal credit cards in order to fund. That's great that we have those resources, but in truth, it puts us at having lower startup capital than our male counterparts. And that's one of those long kind of success determinations for a business is having enough access to capital. In fact, those that start up with enough actually are able to hire more employees and have higher revenue. So I'm really excited with who we've been bringing to the table today, the partners that are here, be they traditional banks, be they alternative funding, microfinancing. There's just so many opportunities, but I have to tell you, while we still have our challenges, we are still fighting discrimination and marginalization. We as women take ourselves out of the race by not trying, by not starting to have conversations with these funding institutions who really and truly just want to see us win. So I'm excited to introduce to you our panel today. I'm going to tell you a little bit about them. Thank you for that moment. First off, we have Kim Boyden, and Kim Boyden is the Business Development Officer of Lift Fund Fort Worth. She promotes business development in marketing Lift Fund products, services with bank partners, other small lenders, referral sources within the communities she serves. In particular, she has worked hard in volunteering her time in public speaking with the UTA, Boots to Business, and the Joint Reserve Air Force Base, holding reboot workshops for veterans returning to start their business. She's very knowledgeable with over 24 years of commercial lending, asset lending, and microfinance experience to help small businesses reach their full potential. As well, then we have Linda Williams, Economic Development Specialist with the U.S. Small Business Administration. She serves as the Economic Development Specialist with over 15 years of service with the SBA. I'm laughing because we have lots of conversations, so I'm just kind of thinking about a little bit of those things. But she's held positions in lending, lender relations, and economic development. Prior to joining SBA, she held marketing and development positions in publishing and healthcare industries. She earned a Master's of Business Administration degree from Dallas Baptist University, where she also taught as an adjunct professor in the undergraduate business program. And next we have Erica Hirsch, Senior Loan Officer with People Fund since 2012. She is responsible for guiding new clients through the loan process and developing partnerships throughout the Fort Worth footprint. Her diverse experience in lending, grant writing, community outreach, business assistance, and education. Erica is an officer with the Fort Worth Chamber of Commerce, Cowtown Leads Exchange, and the Burleson Chamber of Commerce Power of Heels Committee. She currently serves as a head judge for the City of Fort Worth's business plan competition. And in her spare time, don't we love how all these women have spare time? Erica is also a certified biblical counselor. She has a passion for helping others realize their full potential. And lastly, but not leastly, is Melanie Caron, Vice President, Small Business Banker with Bank of America. Melanie has been with Bank of America for over 15 years and specializes in cash flow management and commercial lending, as well as serving as a client advocate to ensure business clients receive individualized service and to meet their financial goals. She has worked in several roles over her career with Bank of America and has a passion for leadership and training and development that has led her to key leadership positions and to win several accolades with the bank, including Pinnacle Diamond and Business Integration Awards. So ladies, thank you for joining us and welcome. So there's a lot of questions that we have on funding. So I actually want to start the conversation with helping you understand the difference between these options, because there are some ways that they overlap, and then there's some distinctions that they have there. So ladies, if you don't mind, just give us a brief overview of really what makes your entity special, what you specialize in, and who y'all love to help. Go ahead.
Live Fund has been in business since 1994. We're a micro lender, and our goal is if you dream it, we'll fund it. What we specialize in, what we're very good with, minorities, women-owned businesses, and we have thank you. We have grants right now to help veterans. Veterans are we do a lot of boots to business in the reboot, because we have a large grant that helps us buy down the rate. When you apply, we can take that grant and help buy down your rate. We also have extra funds available for women-owned businesses. Of anyone owning 51% or more of the business, we can also buy down the rate on those as well. With our company, we have a rule that you can come back every 6-7 months and reapply for more funds as your business grows its book of business. We have not only our micro lending, but also SBA Community Advantage loans available for startups.
Wonderful. Erica, Linda, I'm gonna have you wrap up so we can make some distinctions there. Hey, Erica.
Sure. Hi, I'm with People Fund, and we are a nonprofit micro lender as well, and we give loans up to $350,000. So what we like to say about us is that we're the bridge to help you become bankable. So if you just have an idea, whether you're starting a business or whether you're an existing business, that's where you would come to us for help, and then we would pass you along to a bank after that.
Go ahead.
And at Bank of America, as well as most large financial institutions, we can help you obviously with your financing, as well as all types of depository and other services. We're going to really focus on clients that are looking for expansion. So startups tend to be more difficult for normal traditional financing, but that's why we like to partner with these types of institutions, to where you're really going to be getting the best of both worlds at the same time. Bank of America does specialize in both conventional as well as SBA lending.
Linda, explain to us how the SBA really is involved with lending, because you're not a lender per se.
That's right. We're only a lender. Well, we would be if you just got hit by Hurricane Florence. We'd be a direct lender for you. We do lend directly in times of disasters, for declared disasters. And we also help through that program on individuals and families. But most people have heard of SBA, and usually it's about our lending programs. We've been around since 1953, but the way that, and our objective is to help start and grow small businesses. The way we've done that through the years has changed. We used to be a direct lender on SBA loans. We would process them and approve them and disperse them, for businesses, even if they weren't through a disaster. But now we're highly leveraged. We only have 2,000 employees nationally, but yet we have one of the largest footprints. And the way we do that is through lending partners, and we have traditional banks, brick and mortar, like Bank of America. We have nonprofit lenders. On each side of me is one of our nonprofit lenders in our micro loan program, in our community advantage, and they also operate in some of our other programs as well. But what we do traditionally, when you think of a loan, you think of a commercial lender, and what we do in that case is that we have a guarantee loan program. It works kind of like the FHA loan program, a lot like it. In other words, there's an insurance policy on that loan. For the bank to become whole should you default on your loan. That doesn't mean that you're off the hook in paying back the government for that loan at that point, but it makes the lender more confident in being able to make that loan to you. There still have some risk involved. The guarantee is anywhere from 75% to 90%. depending on what type of loan, how long it is, and that kind of thing. But that lender does not have to make the loan, and in fact, we're a loan of last resort in that case. The lender believes that you can and will pay the loan back, but for some reason they're hesitant to make that loan. You may be under collateralized. That's one of the most common reasons, or it may just be because you're a very small business. There's a lot of risk to small business lending. But on the other hand, then we have what we call mission-based lenders. They're nonprofits, and they look at the whole scenario a little bit different than a for-profit bank that's answering to a board of directors. In the case of the micro-lenders on each side of me, and we work very closely with all of these lenders, they're actually intermediaries. They borrow from the SBA at a certain rate and they mark it up just a little bit. And I want to say something about rate. Commercial lending of any type is totally different than consumer lending. And it's something that you need to understand before you ever get in front of someone to offer you a business loan. Remember that rate follows risk, and you are risky as a small business. So you're not walking in a bank or wherever and asking for the rate sheet to see how much the rate is and to compare that to something else. They have to really rate you. They have to really look at the whole scenario. So it's different. And so at any rate, so that's how we exist. We want to make sure that the money gets out there some way. We're not out there saying you have to turn your portfolio, Bank of America, into small business loans. In fact, that would be the wrong thing to do. But we want to be a tool in their bag, and we work behind the scenes. SBA, she mentioned Linda McMahon. She's at the helm of SBA now, and by the way, she started her business on a credit card. That's not the way to do the whole thing, I'm just telling you, but in a rented IBM Selectric typewriter. So everybody has to start somewhere.
I love that you brought up the conceptions about rates, because what I find for business owners is oftentimes there's some things out of alignment. There's expectations out of alignment with what is reality. So, and they'll take it as a personal judgment on the business, but I figure if we can talk about maybe next what are some of the misconceptions that people have when it comes to accessing funding and what they can and cannot use that money for in general. So Kim.
Okay. We have a lot of people that come to us, new businesses that want to open a line of credit. Lines of credit are not for micro lenders. We strictly do term loans. And lines of credit, of course, is when you graduated into bank financing. We are a stepping stone to get you there. So that's one of the large misconceptions that we have. Your rates were based on, the rates are based on debt to income ratios. So we look at how much money you have going out in your life on those credit cards and how much money you have coming in with your income, with your current position. And then we also look at your credit. You know, we go as low as $500 on a lot of our small promesa loans and micro loans. However, you know, if you need to be at about 625, 650 to go into an SBA loan. So we will educate you and do the stepping stones to get you where you need to be so you can apply. And so if we can work with you on that. And so like I was saying, you constantly grow your business and keep coming back every 6-7 months if you need to. If you grow too fast, don't go into panic. It's a good thing as long as you're breaking even. So that's where that's probably the biggest misconception is you can't just use it as a line of credit. And you don't rush to pay us back. We all don't have prepayment penalties, but you want to use the money and you suit the purpose to grow your business, not worried about paying the loan back so fast.
Wonderful. Anyone else have a different misconception?
There's one thing that I always like to talk with my clients about, and that's to know what the purpose of the loan is for. So like she just mentioned, everybody comes to me asking for a line of credit, and I'll ask them, well, what do you need that for? And they want to go buy a building. That doesn't work. So what's really important is that you want to match the purpose with the type of loan that you're looking for. Most good loan officers will dig deep enough and actually steer you in the right direction, but it's even more beneficial for you if you can go in with the right information. So specifically, you want to know what are the use of the proceeds, meaning is it working capital? Is it because I'm growing and I already have a lot of money out that I'm with invoices out, that I've got a high accounts receivables, I know that money is already mine, that is the proper use of a line of credit. If you're needing to do some type of an expansion, whether that be with a building or even I just need to hire some new employees or I need to get a new computer, those are more term loan product needs. And so you really want to make sure that you're focused on how quickly you want to pay back. So short-term financing, again, those are going to lean towards credit cards and lines of credit. Long-term financing, anything over 12 months, is going to lean towards term loan. The other big difference between the two is a line of credit and a card is going to always be on or typically, I should say, be on a variable rate, whereas a term loan typically is going to be on a fixed rate. As you know, probably we are in a rising rate environment, so anytime you can get a fixed rate, that would be of a benefit for you.
I do have one thing to add to that is that, yes, it is very important to have your use of funds laid out. You are applying for a loan, but let's say it's $200,000, but you can have different uses of funds within that $200,000. It's not just that we're going to give you $200,000 and you do with it as you see fit. If there is something in there that is inventory, if it's working capital, if it is equipment, if it's furniture and fixtures, anything that's going to be used as collateral, we are going to want to pay vendor directly for those items. So it's not just going to go into your business bank account for you to do with. So be prepared for that.
Awesome. So I want to take a moment and open up to see if the audience has any funding questions. I know Brenda has the mic. I have plenty of questions to keep on, but if you do have a question, feel free to raise your hand. I'd love to make sure that we're answering and giving you the information that you need. Okay. Feel free to raise your hand and Brenda will come. I'll go ahead and ask the next question.
I have a question.
Oh, sure. Go for it.
Okay, so if I wanted a $50,000 loan for equipment, that be a specific loan, equipment loan, that might be more beneficial than just doing a general term loan?
It would depend. Are you a startup or an existing business over 2 years?
Existing business over 13 years.
Okay, all right, that would go to the bank.
Yeah, definitely. So anytime when you can have collateral, obviously that's going to be less risky for a bank. So typically you're going to have better rates and terms. So if you have the opportunity to get an equipment loan, that's going to generally be better suited for you. Most financial institutions like Bank of America will also have an unsecured term loan that you could look into doing, but typically speaking, an unsecured term loan is going to be a higher rate, so as well as potentially less in term, so meaning that your payments would be higher because you're having to pay it back quicker. So if you are buying a specific piece of equipment for $50,000, I would highly recommend an equipment loan.
Awesome. So if you were going to leave with one tip that you wanted to make sure that the people in the audience heard, what would that be for today?
I'll say, don't go without enough capital. One of the biggest things that business owners do, the ones that make fatal mistakes and their businesses go out of business, is because they're undercapitalized. And 70% of small business owners never ever get in front of a lender. But before you get in front of the lender, you need to be prepared. I have a whole resource guide back at my table. I want you to take one, and I'm on page 5 if you need me. But it lists our counseling partners. We have Small Business Development Center over here at this table I'm seeing. And we also have SCORE. We have a number of counselors. These two ladies have counseling in their loan programs. It's financial related, but you probably are going to need some other counseling as well. But generally speaking, you need to work on that business plan. Start thinking of it now. Don't wait till you run out of everything, all your money, and then you're trying to keep that door open and you're chasing money instead of customers.
Yeah,
Thank you.
I'd
Go
like
ahead.
to add to that. I send people that don't know where to start to SBA.gov. There's a template, a business plan template that you can work off that really helps. And you learn your demographics and know your numbers, so therefore you know how much money you should be applying for in your use of proceeds. So that will really help you in guiding you to build a business plan, and that's where you're going to come up with the dollar amounts. And of course, you know how much you're going to charge, and then you double and triple it throughout the 2 or 3 years.
Yay, SBA.gov, just remember that. They have a
Ladies,
business plan too.
Melanie or
Yeah,
Erica?
I have so many recommendations that it's hard to say just one, but I would think that the biggest thing that's important to know is that bankers and CPAs have different ideas when it comes to doing your taxes. It is really important that you look at your bottom line. We're gonna always base everything based off of your net profit and then potentially add back some additional items like depreciation. If you are writing off everything in order to not pay taxes, that's in a benefit on one case, but on the other hand, it's very challenging to get lending. So I always joke that paying taxes is the cost of getting credit. So that's one thing that I would recommend that you have a conversation with your CPA about as far as what write-offs you could take versus which ones you should.
Wonderful. Erica, last thing?
They took both of my answers.
Okay, all right, wonderful. Well, ladies, this is the end of our time. I know we're trying to get back onto schedule with you guys. So I want to encourage you that if you have questions with funding, I have had conversations with each of these people, and we have other lenders in the room. They're happy to answer questions. There's no charge, no pressure, no commitment. They're just really here to help see you win. So thank you so much. If you have any other questions, be sure you connect with them. And I believe that kind of wraps us up on this section. And do we know how long of a break we have? No break. We're going straight into the next session. Okay, so thank you so much, ladies.
Thank you.